How's everybody doing? Are we hanging in there? I know I am between you and cocktails, so I will try not to put you to sleep so you can make it to the bar. Today I'm going to talk about gold down but not out. You probably could have guessed that I was going to be bullish on gold if you've ever heard me speak before. Before I get into that, I want to share a story because I know everybody's been busy. Many of you were out on the cruise last night. You got up early this morning. You may not have read the paper. Do you realize that Vladimir Putin, Keir Starmer, and George W. 43 all died and went to hell last night? Did you guys know this? Yeah, they did. They died and went to hell, right? They get down there, the devil's kind of showing them around, a little tour, pain, suffering, hellfire, damnation, pretty much everything you would expect in hell. But Putin notices in the far corner of the room, there was this big red phone. And he's like, wow, what's that? And the devil says, it's the newest technology. He's so proud. He's like, you can call back to the living world. Putin jumps on the phone. He's on the phone to Moscow, talking to his comrades at the Kremlin for about 5 minutes, hangs up the phone. Devil says, that'll be $500,000. Putin's got a huge anger problem, right? He's like, you kidding me? I'm on the phone for 5 minutes, $500,000? And the devil says, you don't understand. You're talking to living people. You're dead. High technology, pay up. He pays up. Keir Starmer gets on the phone, calls 10 Downing Street. He's on the phone 10 minutes, hangs up. Devil says, that'll be $1 million. He didn't like it, but the math worked out. He paid up. George W. 43 gets on the phone. He's showing no fiscal restraint whatsoever. He is on the phone for like 3.5, 4 hours, right? He's calling White House. He's calling the ranch in Texas. He's calling friend, family, pets, people he doesn't even know. He finally hangs up the phone 4 hours later. The devil says, that'll be $5. Putin threw another fit. You can expect, right? 5 minutes, $500,000. 10 minutes, $1 million. 4 hours, $5. And devil said, listen, since Biden took over, America's gone to hell. It's a local call. Okay. Now, I tell that joke. I've been telling that joke actually for about 10, 15 years now. And I do it for a purpose. Make no mistake. Biden may not be perfect. Obama may not be perfect. Trump may not be perfect. But none of them created the problem we have on their own. All right? This is decades of fiscal irresponsibility from both sides of the aisle, and that is why you're here to talk to me about gold, okay? Because that's kind of the solution to the ills. So we'll get into it. Let's talk about what's going on with gold this year, right? Great run. If the year ended in January, it would have been fantastic, right? But it didn't end in January. Kevin Warsh went ahead and got confirmed as the new Fed chairman, and we started dropping bombs on Tehran. And you can see to the right of the chart what happened when that happened. Gold fell out of bed. It looked horrible, right? I mean, would you want to buy into this kind of a chart in your portfolio? I'm with you. I am with you. I have a yeah. But, I mean, that's really not positive for anybody. Silver, same thing, maybe a little deeper and a little more volatile. So since the peak for gold at about 5,500 an ounce, since the peak for silver at what, about 115, 120, depends what newsletter you read, gold is down 25%, silver is down 50%. It's over, right? I'm getting calls saying we're done. Should I have gotten out? Am I too late? And you know my answer to that too, even before I say it. But a big part of this was war. War, what is it good for? Absolutely nothing. It wasn't good for gold this year. And everybody comes out and says, well, wait a second, the war premium, gold should be through the roof because we have international conflict. We've got Russians and Ukrainians duking it out. We got problems in the Mideast. U.S. is dropping bombs on Iran. Israel's dropping bombs on Lebanon. This is not good. Gold should be soaring. Well, the reality is that's really not what happens historically. If you look historically, that's not what happens. Gold doesn't surge and stay up. You will have short-term movements in gold, for sure, but this conflict is different in Tehran, right? So people are looking at the impact of bombs falling on Tehran, the Straits of Hormuz being closed, and oil not flowing, right? And what they're saying is, if oil doesn't flow, that will be inflationary on virtually every good or product that makes its way to market in this world, right? And higher inflation is going to drive the Fed to do what? Raise interest rates. And raising interest rates is not good for gold. This is the thought process that's been going through people's minds since we dropped bombs on Tehran. It's all about oil and its impact on interest rates and how that's going to be bad for gold. Okay, and I'll get to whether or not I think that's the case here in a second. Gold has some headwinds. We have some technicals, right? We have dropped down significantly, and there's potential through weakness that we will go even further. I hear people talking about resistance at $3,800 an ounce, even possibly down to $3,300 an ounce. I am not a technical analyst. I don't pretend to be one, and I did not stay at a Holiday Inn Express last night, okay? But these are real numbers. Professionals do their work, and they say, okay, there's a real chance we could hit those levels. Whether we do or not, we'll find out once we get to the future and look back. Interest rates. I mentioned this, that everybody's concerned about the impact of oil on interest rates and therefore the negative connotation for gold. Does anybody actually do the math on this? Because I don't see anything to be worried about. Our interest rates right now are what, 3.5 to 3.75, right? Where's inflation? Below or above that? Absolutely. So what's our real return on investment? Negative. Is that going to dissuade anybody from buying gold? Negative interest rates or negative return on because of interest rates? The bottom line is, in order for us to go ahead and have interest rates that are going to dissuade people from buying gold, you have to have enough of a positive return on your investment where it's better to go that direction and take a chance on term deposits than to hold gold. We're talking historically probably high single digit, low double digit interest rates, 9, 10, 11, 12% before we have any sort of impact. Now, Volcker in the late 70s, early 80s was able to take our interest rates to 20%, and he whipped inflation, right? He also killed the bull market in gold, right? 20% because the inflation rate was down around 10. Guess what? I might consider that if I can make 10% in a year versus, holding some other risk asset, right? Why can't we do that now? Why doesn't Warsh have, I heard it, yes. Warsh can't do that. Powell can't do that. Nobody can do that because we have a $40 trillion debt right now. Does anybody know the math? My head can't do these numbers. 40 trillion of 10%, what is that? Is that a lot of money? That's going to be our annual bill to service the debt. Okay, we cannot go there. I am not concerned about interest rates. We can't go high enough with interest rates because of the debt to dissuade people from buying gold. Crazy. Interest rates, seriously? There are alternatives, all right? Right now, the biggest alternative, probably the biggest benefactor of this war is not gold, it's not silver, it's probably the dollar. But even that, think about it. The dollar, not too long ago, was 116 on the legacy index against our major trading partners, right? Where is it now? It was 116. Where is it now? 101.14, I think, as of this morning. 101.33 last week. Not too long ago, and for a long time, it was 98.99, below 100. Not strong. Maybe stronger than other currencies, right? But certainly not dollar strength. And this war effort is positive for the dollar. It's got us up above 101. But seriously, is that strength? Is that enough to dissuade me to take away my confidence in owning gold, to put any confidence in holding dollars or treasuries? Well, the rest of the world doesn't think so. Central banks have been buying. I think you guys know this. If you heard me speak last year, you know that the central banks have been buying like they've never bought before since 2022. In 2022, they bought over 1,000 metric tons in 1 year, central banks. That was probably a 50 to 60% increase over any high water mark for like 30, 40 years, okay? That is massive buying by the central banks. You know what they did in 2023? Bought another 1,000 metric tons. You know what they did in 2024? Another 1,000 metric tons. You know what they did last year? Not 1,000 metric tons. They only bought 850. They had an off year, okay? But prior to that, the most they ever bought was like 650 metric tons. So it's still a massive increase. And this year they're on pace to do another 500,000 metric tons with half the year's central bank buying in the books. So the central banks are not buying, and the whole time that gold price has been going from $1,800 an ounce up to $5,500 an ounce, and now down to about 4,000 today, 4,100, okay? So they are price agnostic. They could give a damn if the price was high or low. That is not why they're buying. They don't care about the price. They need to own gold, because the alternative, mismanaged fiat, whether it be the dollar, the euro, the yen, or any other mismanaged fiat, is not worthwhile compared to the tier one asset known as gold, the world's only real money. So central banks are buying it for inflation protection. They just did a survey and they asked them all, inflation protection, because they're fearful of the weaponization of the dollar, which we've been going after our enemies, and that's fine, I guess, but it also makes the central banks think, well, I'm friends with the US, but what if I cross the line, I get on the wrong side of that friend relationship, and now they don't like me and they pull back my access to international markets, right? So they're protecting themselves, they're developing their plan B, which is holding something else, gold, okay? And they know that the paper money experiment has failed, okay? They know better than anyone, right? They maybe didn't cause it. They're not the politicians that overspent and drove us to this massive debt. But they are the central banks then that finance that debt by expanding money supplies like there was no tomorrow. I mean, if you look at the chart of the money supply, right, just in the US, it's pretty stable for a long period of time. And then we had the 2008 financial crisis and it spiked. And then what happened behind that, maybe about 12 years later? Pandemic. And all that money, we paid people to stay home, to not produce. What's that? Helicopter money. Yeah, Ben Bernanke's helicopter money. Exactly, that's what happened. And if you look at that chart, it goes hyperbolic, all right? If you ever want to know where the gold price is going, look at the money supply chart. It is hyperbolic up. Guess where the gold is going? Hyperbolic up, all right? I don't see any other way around this. I can't give advice, so I had them cross that out on the slide. My opinion is that the central banks are leading the way and we should absolutely follow their lead, okay? I buy into, I'm not saying I'm a big fan of central banks, but what they're doing right now is absolutely what you should be doing. You should be your own central bank, okay? You are fantastic. All right. Let's take a look. Let's put things in perspective. I showed you the 1-year chart for gold and silver. Here's the 100-year chart for gold. Have we been expanding or decreasing the money supply? It's a quiz. Absolutely expanding. Yes.
They're already bailing out.
I understand. I'm going to get to that in a second. They are going to bail out. 100-year silver chart. Again, same thing. That blip from January, the end of January to now, really doesn't even show up on this chart, does it? Always, if when in doubt, zoom out. Take a bigger picture view, understand what gold does for your portfolio, okay? I'm gonna give you a number dump here. I hear people all the time telling me that gold doesn't do its job, it doesn't produce anything, it doesn't generate interest, doesn't generate dividends, and that's why it's a dead asset, a barbarous relic, and you should never own it. I'm gonna share some numbers with you from 2000, the beginning of this millennium, to a couple weeks ago when I crunched the numbers to prepare this presentation. In 2000, gold was $409.17 an ounce. Today, or 2 weeks ago, whatever, $41.82.90, okay? Gas, back then, and by the way, this is when my Arsenal Gunners, the last time they won the EPL, this is what generated this article. I'm a big fan of soccer. Arsenal won the title 20 some odd years ago. These are the numbers from when they did. $1.88 for a gallon of gas, $3.73 now. Home, the median home price was $247,900. Today, the median home price is $422,500, okay? College education, tuition at a public university, not room and board, not all that, just tuition. $5,100 back then, $15,000 now. And The most popular truck in the world, or in the US, Ford F-150. Back then, you can get one basic model for $25,000. Today, $40,000. And that's wonderful, but I took it back a step because we measure everything in dollars, right? That's our measure of value. And I'm a big proponent that we never should, all right? Any unit of measure needs to be constant and consistent, or it's absolutely worthless. So, ma'am, your table in front of you is probably about 6 feet long. If I took a 12-inch ruler and I measured it, I'm gonna take 12 lengths of that ruler to measure the table. If I went home tonight and I cut an inch off the end of that ruler, now it's 11 inches, right? But I'm gonna call it a foot. What the hell? It's a 1-foot ruler. I measure, now your table is 6.5 feet long. Did your table grow?
No.
Absolutely not. Your measuring device sucks, to play part of my French. Same thing with the dollar. If we use the dollar to measure worth and value, it's a horrible measuring device. It's inconsistent. It doesn't give you a number. You have no meaningful price discovery when you use the dollar to measure worth and value, okay? So let's go back and look at those numbers again. Back in 2000 or 2003, whenever it was, 218 gallons of gas is what you could buy with 1 ounce of gold. Today, you can buy 1,121 gallons of gas with that ounce of gold. Back then, you can buy that new home for 606 ounces of gold. Today, 101 ounces of gold will buy you that new home, okay? Back then, college education took 12.5 ounces of gold, just the tuition, not the room and board. Today, 3.6 ounces of gold will get that done, okay? And that Ford F-150 back then was 61 ounces of gold. Today, 9.6, less than 10 ounces of gold. You get free shipping with that when you buy 10 ounces or more. The bottom line is gold has done its job. Don't listen to the naysayers. It preserves purchasing power. It does it well. It's done it for millennium. And right now, gold is on sale. I had a gentleman, I'm not gonna name names or disparage anybody, but he came to my booth and I said, listen, gold is the weirdest thing. It's the only asset that when it goes on sale, people don't buy it. They step back and they wait and watch, right? If something else went on sale, you could go to bed last night, you don't want it, you don't need it. It's on sale this morning, you need 5 of them, right? Gold goes on sale, everybody said, oh, I'm gonna wait. And he said, you know what, I'm one of those guys. And I said, okay, what's the deal? He said, I think it could go to 3,800. And I'm like, I think you're right, it could. Do you know it will? Do you know it'll go to 3,800? Because we're talking only like $250 from here, right? What we do know is it's dropped $1,500 from all-time highs and nothing fundamentally has changed. Nothing, right? So why don't we act on what we know, right? Take some of your cash, maybe not all of it, a little bit of it, and dollar cost average in, capture what we know. And then if it dips a little further, if you get what you hoped for, buy some more and average down. But get emotion out of this, right? Please do me a favor, get emotion out of this. Gold is on sale. Gold is dirt cheap. You heard me say it last year. Silver is even cheaper. 25% drop, 50% drop. I am certain they're both going higher. I cannot guarantee it, but I would if I could, okay? Actions to take. Let's talk. I'm at booth 44. Please come visit me. I have every manner of ownership of gold, silver, platinum, palladium, et cetera, ways to hold it. I have expertise for about 30 years. I'm the new guy. I've only been there 30 years in our 44-year company, okay? But I'm willing to share my experience with you. Embrace the dips, like right now. Buy well, right? Investments are the best that are bought well, okay? Take profits. Now, understand this, and I'm about to run out of time, but profits, and I'm gonna switch to the next slide real quick. So contact information. Profit for me is typically silver. Gold is typically wealth insurance. So when I take profits, I'm talking about your for-profit precious metals. Don't feel bad if all of a sudden you allocated 10% and it's up to 20 to take some off the table, all right? But for wealth insurance, you buy it, you hold it, and you never get rid of it unless you need it, all right? That's only for a crisis. And if you do that, and you do that well, you'll be able to keep what's yours, which is basically protecting your purchasing power, okay? If you come by booth 44, let me scan you. We're gonna give away one 10th ounce gold maple. 25 years ago when I started talking, this was a $25 coin. It was expensive then. It's more expensive now. It's a $400 coin. And that's got nothing to do with gold getting stronger. It's got everything to do with the dollar being mismanaged and getting weaker. I have a solution. Come join me and I'll share it with you. Thank you.